Hello and welcome to the Ladies' Room. Today my guest is Edward Van Raay. So I am happy to have you here because of all the confusion now with this health care plan and Medicare and Social Security. And so whatever laws are in place, like the bipartisan thing they did under Obama for Social Security, is that all in danger now? What is going on? We're all so confused.
Well, I'm glad you asked the question. The so-called Bipartisan Budget Act is actually something that Obama had to do as part of reconciling with the Republicans. And one of the ways they could do that is to basically give in on some of the Social Security benefits, in the sense that we have an old rule that says file and suspend, which was a rule whereby spouses could choose between the benefit of one spouse and start filing and not sort of taking the other spouses. In other words, we had flexibility between husband and wife to look at their work record and to say, okay, at this point I want to file half of my benefits, because in Social Security you can file half of the benefits of your partner. So the idea was that in the old days you could have full flexibility in just choosing between which spouse had the better work record. And it made sense to say, okay, if I had the lower work record, I'll just file for half of the benefits on my partner.
So
and then years later, I would just be able to switch back. And in the meantime, my own benefits would grow.
So even though you're getting half of your spouse's benefits,
your own benefits would grow.
You keep working, and
Yes.
you're not. But didn't they say once you took your benefits, you couldn't make more than $12,000 a year, or you couldn't make more than a certain amount, or else you had to pay back 50 cents on a dollar or something?
Well, the rules is such that if you have reached full retirement age,
Yeah.
you can work and it has no impact on the benefits. What has happened that
You take it early, though, it does have
yes, if the real window is between the ages of 62 and 70, and people have the tendency to file the minute they can at age 62 without really looking at what that does. Because some of the rules in Social Security say if you take it at full retirement age, you get 100% of your benefits. For every year that you want to do it sooner, you kind of cut your own benefits by 6% a year. So for people who apply at 62, they by and large miss 25% of what they call their benefit amount.
Oh, wow. That's a lot. I think I took mine at 65, so if you're born in 1940, where did they change, how old do you have to be now? It used to be 62, then didn't they raise it to 65?
They did not change the window. They didn't
didn't?
change the window between 62 and 70. What they did change is the so-called full retirement age. And back in 1983 was the last change of that, and they decided that, okay, everybody that was born, say, after the Second World War, their full retirement age is 66. Anybody born after 59, it is now 67. Okay. So,
because it seems like they keep raising it.
Yeah, for two reasons. One is, of course, people work longer, and the other reason is basically that they want more of your work earnings going into Social Security. So every year that you work more and you contribute to Social Security, it adds to the kitty, so to say.
Should people be worried about Social Security? Is it in danger?
Well, a lot of people have the tendency to say, well, why should I bother? By the time I want to claim, there's no money left. In fact, it's not that bad. There is about, believe it or not, $1 trillion in the kitty, and we only take out about $950 billion. So if you look at today, the inflows into the Social Security system by the workers and the outflows by the people who claim is actually still in a surplus situation. What they do feel is that if we continue like this unabated, we will run out of money by the year 2034.
2034.
Now, but a lot of changes could be made. We could increase the payroll tax. It's on 6.2% today for anybody earning up to $118,000. How about bumping it up to 7%, for example? Of course, you can
Which would be minimal, and those people are making good money.
Right. And the other thing
it wouldn't affect the people making less than that.
Correct. And the other option is, why don't we tax the payroll tax for people who are all the way up to, say, 200,000 in income a year?
Or
Why
even
not?
over 500,000. I mean, there's so many
Yeah.
people now that are making so much money, they can afford it.
Right. So in general, I think if the political will's there are many ways to tinker with the system without running out of money. The system, obviously, was started by Roosevelt in '35, so it's a good 80 years old,
Yeah.
82 years old.
It's worked well.
And it really has worked very well, I believe. And I think the challenge is that despite all the efforts of the Social Security Administration, people still don't understand how it really works, when to really file, how it affects the benefits. And that's kind of strange that with all the information on the web, it's a good website, but people still say, well, I don't really know how it works.
Yeah, it's a little confusing.
Yeah, and they had various surveys. The last surveys, I think, was done by the CFP, and it was only done a year ago. And they said that, when they were interviewing people about how they understood Social Security and when to file, something like half of them said, I don't understand how it works. And then when the question was asked, well, do you understand that if you file early, you lose a lot of benefits? Even that was unclear to half of the respondents.
Well, I took my Social Security early, I guess at 65. So I didn't take it at 62.
Right.
But when I did the numbers, it seemed to me that the money that I would get in that 5 years, between 65 and 70, was a certain amount of money. Let's just say 50,000 or something.
8% a year. For every year that you delay, you get 8% more of your what they call primary benefit amount.
So I lost 40% that 5 years. 5
You
eighths
lost,
are 40.
8% a year.
And there's no way to go back. There's no way to roll that back.
No, the Social Security gives you a window of 12 months. So people who file and say, oops, I made a mistake, within 12 months,
Yeah.
you can go back and give them all the money back and then say, okay, let's start anew. I want to just file at a different date.
Well, you have to give them all the money back.
Yeah.
It's also confusing to me that you said that the spouse can claim half of her husband's or whoever's making the most money.
Right.
Is the spouse able to collect that money right when the person who's taking Social Security starts? They can take half and still keep. Say it's a 30-year-old woman married to a 65-year-old man,
Right.
and he takes his Social Security benefits. That 30-year-old woman can get half of his benefits for.
No, it's all triggered by what they call full retirement age. So
the woman has to be full retirement age too?
Yes. And right now,
Okay.
because of the Budget Act signed by President Obama, there are now kind of 3 age groups, which is kind of confusing because most spouses, they have maybe 2 or 3, 4 years difference between them. So
Right.
one spouse is affected by the Budget Act, the other spouse may not be.
Mm-hmm.
So the issue is really you have to look at, okay, what age group is affected and what isn't affected, and what works best. The idea in Social Security originally was the man usually works, the woman stays at home, takes care of the kids. But the idea behind Roosevelt's setup was, well, we don't want to preclude the woman of having benefits too, and if she doesn't work, we'll have her half of the benefits based on the husband's work record. So that was the idea, that a spouse can always look at 50% of the work record of the partner.
Do you know, most people don't know that. And Social Security does not tell you that you're entitled to half of your husband's. Or in my case, my husband was entitled to half of mine because he was an artist and he never paid in. And it was a German friend of mine that told me, Michael can get, this is a painting of Michael's.
Oh,
it's
how
tax
nice.
time, so I thought we'd bring some daffodils in because
Excellent.
the daffodils are
Excellent.
all going nutty outside now. But, so Michael never paid in. I mean, he paid in a couple of years.
Right.
But mostly you get his report and it's like 0, 0, 0, 0, 0, 0, 0. So, 3 or 4 years went by that we did not know that he could get half of mine. And
Well, the
then I
sad
called
thing-
up and they were very nice about it. They said, oh, sure. And I was like, why didn't you tell me? And they said, oh, we don't tell people.
They are by law not allowed to give advice. So that is where the quirky things
I
come
see.
in. They will be fully happy to answer all your questions,
Yeah,
but they're
they
not
were
going to
very
say,
nice.
you should be doing this or you should have done that. Any advice is unlawful, so
I
they
see.
won't give that. So this is where the challenge is. You either get a financial planner or somebody who's versed in Social Security planning to say, okay, what should I do? And right now there are many software programs that you just plug in your statement and your husband's statement, and 5 minutes later you have the best strategy of filing, both for yourself and your husband. So there's a lot of software around it that makes it a very
Is that
easy
software
decision.
fairly new? I mean, I don't think it was around when we were
It
making
is fairly
these
new,
decisions. Yeah.
basically because of the Budget Act
Uh-huh.
in November 2015 when Obama signed that, for the simple reason we got 3 age groups that are now like, well, wait a minute, were you born before 54, or were you born between, 54 and 50, or are you now, it was like whoever is what age in 2016 was the major milestone. So if you were 62 in 2016, you were grandfathered, meaning you could file on the best record of your spouse and just have your own benefits grow. And that will go away after 4 years, and then the grandfathering stops.
And how do they calculate that best record? Do they take your best 5 years out of all of the years you've worked, or the best 5 years of the last 10 years that you worked?
35 years. They look at your record.
35 years.
Yes.
So if you don't think you're getting the right benefit, you can like pull out your tax returns and pull out your
Yes.
best 5 years. And can you pull out one from like 20 years ago and one from 15 years ago and then your last 3, or can
Well,
it be like spread out over time?
This is something that I, as a planner, found sort of curious. When I ask my clients or prospects, can I see a copy of a tax return? Oh yeah, sure. Which year are you looking for? If I ask them, can I get a copy of a Social Security statement? It's kind of silent. They say, well, yeah, I think I have.
Yeah,
I have a statement somewhere.
I think I put
don't
it in
even.
a file.
Yeah, and it's like, well, when did you last look at it? Well, I don't know. I think I filed it 3 years ago, and honestly, so you have to look at your statement, because the statement will say what Social Security has registered for you on your work history. Now, if for whatever reason you had an employer who was kind of tardy or never reported in that you earned $40,000 in 1967, and it's not on the record, how can you now go back and say, 40 years later, can I please get the record adjusted? So the reason for these statements is that people have the opportunity to review and make sure it's accurate. Now, in many cases, it is pretty accurate, but obviously the onus is on the beneficiary to say, I need to check my statement.
Ugh,
make
it's
sure
so
it's right.
complicated.
Yeah.
Do they tax, like when you do your taxes at the end of the year, or in April, coming up, do they tax the money you got from Social Security during the year?
It depends on the level of income. And if you're a single filer or married, but if you're a single filer, $24,000 a year is kind of tax-free. And if you're married, it's up to $32,000. So after $32,000, it becomes to get taxed at certain levels based on what they call your Social Security income, which adds back your tax-free bond interest and things like that to come up with your provisional income. But in general, it's always better if you compare it to 401ks or IRAs, because the most highest tax rate in Social Security is 85%. If you compare that to an IRA, you get 100% taxed. If I'm taking a distribution out of my IRA savings account and I say, oh, I took $20,000 out, so okay, 100% of that $20,000 will be included in your income and taxed. Social Security, on the other hand, they will only tax you up to 85%. That's their highest tax bracket, because you have this little window in the earlier thresholds. Up to 24,000, you don't pay any taxes. Up to 32 as a couple, you back that out. So in general, people don't understand the value of the benefits. They all talk about, oh, my 401k, oh, my my simple IRA or my SEP or my IRA contributions. They all forget to check that Social Security is actually the most important benefit of all, because funnily enough, it's adjusted for inflation. Your IRA is not adjusted for
It
inflation.
is adjusted for inflation, and it goes up a teeny bit, like $9 a year. However, if you sell a property or you have some kind of windfall in 1 year,
Right.
like we sold a property and we got the money last year
Right.
or the year before, 15, and then boom, January 1st, we got a letter in the mail and they cut like $600 out of our benefits because we had that one-time payment.
Right. Right.
And that's horrible because that's for a whole year now. We've lost all
Yeah.
of that's
Unfortunately, those
that's
adjustments
like
are made.
$7,200.
Yeah. That's the unfortunate thing.
Yeah.
And that goes back into the whole planning exercise.
Can you have that corrected if you, like in April when you do your taxes again and show them like this year we don't have that? Will they correct it in 1 year, or do you have to wait till the next year?
You have to go back and say, look, this is a one-time event, and at this point going forward, we're back to where we were and have nothing. So you can call.
And would they possibly change it in that year, or do you have to wait till the next January?
That is probably a question you have to ask them. This is a very specific situation, and I would say that this is really something that you say, look, you have to call them and say, this is what's happened. Can we have an adjustment of my benefit?
What do you recommend people to do? What do you have to really look at their whole picture before you can make a recommendation?
Well, I find, because of the benefits we just talked about, that Social Security should be an integral part of your financial planning in general. A lot of people see that as a standalone decision. Oh, I'm 62, I'm just going to go and file. And yet it's part of the whole household's planning. Look at who is responsible for Social Security. Is that you as a worker? Is that your spouse? Who has created the work record? And who else in the household will depend on that work record? And a lot of gentlemen, they have their own opinion and say, I'm going to file, not realizing that, well, if you file and you file early, your spousal benefits will actually be drastically reduced.
Yeah.
And you have to look at, if you love your wife, and say, look, I want her to get the highest benefit.
I'll keep working and not collect.
At least until full retirement age, because then there is no cut in benefits. And the statistics are horrible. If you look at the statistics provided by Social Security, they always come with a time lag. Right now, I think they're looking at statistics from 2013 and 2014, believe it. But the statistics say that in general, women live 14 to 15 years longer than their husbands. So right off the bat, you can say, is that going to apply to me, or is that going to apply to my spouse, or am I in a different health category? But if you're in that general, vicinity of statistic, it's kind of silly to take your benefits early because you're basically shortchanging your spouse. Yeah. It's interesting. There are 60 million people who get Social Security benefits, and the payout is $75 billion a month. And within that group of 60 million people, there are 6 million of them that are so-called survivors and have survivor benefits. Of that group of 6 million, 98% are female. And because of these decisions that the household is taking uncoordinated, for lack of a better word, we see that a lot of these surviving spouses live very close or under the poverty line. Yeah. The average Social Security payout per month in this country is about, say, $1,200 for a single person and $2,100 for a married couple. So it's not that much to begin with. Yeah. Looking at expenses, healthcare, your Medicare, and all your other expenses come down the line. So it's kind of ironic that in my mind, people should look at the whole thing, not just.
Right. What is the relationship between Medicare and Social Security?
That's a good question. Many people say, well, are these things the same or so? They're totally separate. Medicare is really a medical health insurance, and The way they have structured it today is that the minute you're 65, you just have to apply. So 2 or 3 months before you get to the age of 65, you send in your request and basically subscribe.
So you don't have to take your Social Security, but you can still get Medicare.
Correct. So it's a very separate decision, and in fact, if you don't apply for Medicaid, I had a client the other day, and this tells you how important financial planning is and how little people spend in terms of attention to it. Oh, sorry, I can't meet with you, I don't have time today. He was 6 months after the age of 65, and I said, John, did you apply? Oh my God.
Don't you get a penalty if you don't?
You do. I said,
we got a penalty because we didn't get a drug program, because we didn't take any drugs. So I said, we don't need a drug plan, we don't take any drugs.
Right.
And we both have penalties now.
Yeah, the idea is that it's kind of the Obamacare similarity, if you will. The idea is that everybody that's in that program has to pay and apply and pay premiums.
Oh, I see. So it keeps
that
the whole
way
thing oiled for everybody else. Yeah.
You're the one that's not taking drugs, but there are, on the other hand, 10, 50 million who do need prescription drugs.
So most people have accountants, although now with all the new software program, soon who knows. But most people have accountants. But you are are you an accountant and a financial planner, or just a financial planner? And do people need both, or can people do their TurboTax and then still have you organizing them?
Well, it's a good question. I'm technically a financial advisor. I'm registered and licensed as such, but I look at it from a planning point of view. So I take all of the financial events in a household's environment into consideration and look at, okay, how does that going to pan out for the couple who has certain financial expectations, they have a wish list, and then the planner looks at all of that. And people are sometimes confused and say, look, I have an accountant, and why do I need anybody else? Well, an accountant, not to say anything about the profession, is there to do the tax return.
Right.
I have had many cases where I look at the tax return and say, why are you in such a high marginal tax rate? You're in a 40% tax rate. Every dollar you pay in, you pay 40 cents taxes. Why don't you consider contributing to your employer's 401k program? Why don't you consider, putting something away for your own IRA? If you're married, you can actually do that as well as for your spouse. And if you're over the age of 50, you can put $13,000 a year for yourself and your spouse away. And if you're in the 40% bracket, you could save, 40% of $13,000, which is almost $5,000 in taxes, and you create a retirement fund.
Wow.
And then the response, my accountant never told me that. And I say, well, he is not paid to do that. He's not your advisor. He is your tax accountant, and he wants to make sure that your return conforms with the IRS rules and that everything is hunky-dory when it comes to everything that's on the tax return. He is not really paid for, or you can't really expect him to come up with tax tips. Some do, some don't. The majority in general just wants to file a tax return and move on. They're especially out in this region, they're overworked.
You also advise, you have a Wall Street background, right?
Correct, yes.
So do you also, if people want you to or ask you to, do you advise them about their investments, or do you oversee their investment accounts for them?
One of my major roles is to be the advisor who looks at their assets, their allocation, the investments, whether it's a retirement account or a trust account or a transfer of death account, basically looking at what they call liquid assets. And the majority of my work is concerning the management of that, although more and more there is the planning on the side of it. Somebody in the 70s or in the 60s says, well, I think I need to have a trust because I want to shield my assets from my kids.
I was going to ask you about that, wills and trusts. I mean,
right.
Should you have a trust, or is a will enough? Or should you get your children's names on things sooner rather than later? Because don't they have to be on something for 2 years to get around probate and all that now?
No, I think that the question there is that people confuse the trust with wills, in the sense that the will is there if you're no longer here. So the will comes into action if you're dead.
Yeah.
Now, today, the way we're living, there's a lot that can happen between the day you die and the day you're kind of maybe have a weaker health.
Non compos mentis.
For example, there are, I think...
well, early on stage
millions.
Alzheimer's and dementia is a huge problem now.
Yes, there are millions that are now doing that, suffering from that, unfortunately. And so the question is there, how do you cover the moment that you may be diagnosed with such an illness or other serious illnesses and the moment that you pass away? And that's where the trust comes in and where you can say, look, I want to have a trusted advisor as trustee. If I can't add one and one together, I want my oldest son to become trustee for my trust, and he'll take care of things, and there are provisions, and I want him to take care of his brothers and his sisters, and this is what I want happening after I die. And that is all part of what we call the financial planning exercise at the end of life.
So people need to come and see you.
In terms of, I used to explain to my clients, society has become very complicated, and I think people need to realize that they need professionals to help them on their side. One is the accountant. The second person is really the attorney. If you have trust questions, if you want to put a will together, a living will.
I think we're running over our time.
Oh, okay.
So.
And the third person is the planner.
And the third person is the planner. Edward Van Raay.
Yes.
And your email is?
My business email, and that is my name, E. Van Raay, EVANRAAY, at K as in kilo, S as in Sam, I as in Isaac, F as in Frank, A as in Apple.com.
That was a long answer.
The reason for that is...
what I want, but you find